Hamilton's average home price, as you may have guessed, dropped again in May. But here's what's actually interesting. Nationally, Canada's housing slowdown just had its smallest monthly price decline since October 2025. And there's a real de-escalation deal happening between the US and Iran that's already moving oil prices, which matters more for your mortgage than you may realize. I'll get into exactly what this means for you as a buyer or seller in Hamilton or Burlington as we go through the numbers for May 2026, now that we're in June, heading into the summer. Let's start with the news because it's moving fast and it actually matters for anyone with a mortgage. On June 10th, the Bank of Canada held its policy rate of 2.25% for the fifth straight time. Prime stays at 4.45%. Here's why. The economy's soft, GDP is barely moving, unemployment sitting around 6.5–7%. Normally, that would push the Bank of Canada to a cut, but oil prices have been elevated because of the conflict in the Middle East, pushing inflation up towards 2.8%. These are two forces pulling in opposite directions, so the Bank of Canada's answer has been to sit. Here's where it gets interesting, and this happened after the rate decision. On June 14th, 4 days after the bank's hold, the US and Iran announced a real agreement, a memorandum set to be signed June 19th. I'm filming this on the 17th. Hopefully it's released before the 19th. We'll see what happens there because you never know when you're dealing with you-know-who. And this is framed as ending the conflict within 60 days, including reopening the Strait of Hormuz. Oil prices have already dropped because of the news. I want to be precise, though, about what this is and what it's not. It is a real meaningful de-escalation and not a rumor, but the formal signing, like I said, isn't happening until the 19th. And also ending within 60 days isn't the same as it's over right now. So it's genuinely good news for the inflation side of the bank's equation, but it landed after their last meeting. Their next meeting isn't scheduled until July 15th. That'll be the first real shot at lower oil-driven inflation pressure that they'll get to weigh in on. And what this means for you, if you've been waiting for a rate cut before buying, this is the most promising sign in a while, but nothing is locked in yet. So if you have a variable mortgage, nothing changes on your payment this month. 2.25% isn't high by historical standards, and waiting on a cut means waiting through a market that's already thinning out. New listings here in Hamilton were down almost 21% from just a year ago in May. We'll come back to what that actually means for prices in a minute. Before we get to prices, though, let's talk about what's driving them because this is where the real story is. Hamilton had 542 home sales in May. That's down 11% from a year ago. That sounds bad on its own, but pair it with new listings down almost 21%, and you get a different picture. Sellers are pulling back faster than buyers are. They're realizing that they're not going to get the prices they hoped, and if they don't have real pressure to sell, they're just taking it off the market. Days on market has crept up to 36. That's up 16% from a year ago. So things are taking longer. But that's a slowdown. It's not a collapse that some people have said is happening or predict is going to happen and have continued to over this slow grind down. But the national context is worth knowing. Canadian home sales nationally jumped 5.5% month over month in May. That's the first increase in the last 6 months, and the National Price Index posted its smallest monthly decline since October. So across the country, this slowdown is starting to ease, it seems. Hamilton hasn't caught up with that yet, and I'll show you exactly why when we get to the price numbers. If you are a buyer right now, months of supply sitting at 5 means you have real room to negotiate. However, if you are a seller, fewer new listings competing against you is actually a good thing as well, especially as we move into the summer and people get busy and forget about real estate till the fall. It means that your asking price needs to reflect where the market is today, though, and not where it was last spring. That's the most important part. So, Hamilton's average sale price in May was $755,202, down 3.3% from a year ago. The median sale price in Hamilton, $692,500, also down just over 3%. I'm talking about the median here too, since average can get skewed by a handful of expensive sales, especially because it includes areas like Ancaster, Dundas, Mount Hope, as well as Hamilton Mountain, Central Hamilton, Stony Creek as well. So all of those numbers combined give you your average, which sometimes can throw people off, especially first-time home buyers who hear, $750,000 or $800,000 average price in Hamilton. That's too much. I can't move there. Not the real case. Median is a better read on what a typical home actually sells for. But the part that most people miss is if we go back to April, single family average sale price was $860,207. By May, it had dropped to $840,166. That's down over $20,000, about 2.3% in a single month. So while the national headline was improving, Hamilton's prices kept sliding month over month. That's an important factor, and it's why we can't just look at a national number and call it a day. Real estate is very regional, and even within cities, it's neighborhood specific. So if you break it down by property type, it's not uniform. Single family average sale price, $840,166, down 2% year over year. Median actually flat at $765,000. So single family held its ground noticeably better than the blended number suggested. The townhouse and condo segment is where more of the softness is concentrated in Hamilton, like in Toronto. This is the tension worth mentioning. Nationally, things are stabilizing, but Hamilton specifically hasn't caught up yet, and it's not necessarily bad news. It just means our correction is maybe taking a little longer to play out, but also we haven't been hit as hard as some of the larger markets as well. So you have to take that into consideration as well. Now, what about Burlington? Because it's a very different market. Quick contrast, because it's a good reminder that the market isn't just one thing, like I was saying. Burlington's single family average sale price jumped almost 15% year over year. But the median, which is the better read on a typical home, like I said, only rose 7%. That gap usually means a few higher end sales pulled the average up. Not that every single Burlington home suddenly got that much more valuable. Meanwhile, Burlington's townhouse and condo median actually fell over 10%, even as the number of sales rose. So even two cities 15 minutes apart can be telling completely different stories depending on which number and which property type you're looking at. That's exactly why a single average headline doesn't tell you what your specific situation looks like. If you'd like to discuss yours, feel free to reach out. There's a link below and we can chat.